Hi, welcome back. This is Joe Rabil. So what I'm going to do today is talk about volatility. And I typically start with a lesson. And what I'm going to do is I'm going to kind of mesh the lesson with the analysis on the market right now on the S&P. I think it's such a critical time in terms of volatility that it's worth going through and spending a few minutes on. So I'm going to go through both the daily and the weekly, how I measure volatility and how I use it. All right, let's go ahead and get into this to start. Okay, so I've got a chart of the spider up. In fact, on the right side, I've got the weekly SPY, and on the left, I've got the daily SPY. One of the things I love about this ACP, just being able to split this up and quickly, if I want to focus in on one side or the other, really easy to do. But having them side by side is just incredibly important. I've talked about this a lot when I'm looking at individual stocks, but it's also very helpful when I'm doing this analysis for volatility. In my course, I talk about the third course is called Trend and Volatility, and I'm basically measuring what's taking place in the volatility of the market. And what I'm doing is looking at the size of the bars. That's the average true range, okay, ATR, in each time frame. I'm using a 20 average true range, all right, for each one. All right, so this is the daily ATR is up around a 5.7 right now, and on the weekly it's at 11.7. All right, and what that's saying is that we've got approximately 12 points of movement in the SPY on average for the last 20 weeks. All right, so that means from high to low, including gaps. And the same thing on this side, we've got about a 6-point move taking place on a daily basis. And if you notice, if we look at that level, so we got up to 6, we're pulling back a little bit right now, but look at where it was back at the beginning of the year. It was down around 4. All right, we were down around the 4 level on a weekly basis, and we've slowly started to increase the size of the bars and the gaps, right, to increase the volatility. And when I see an increase in volatility, I see elevated risk. All right, so you can see that essentially starting right around the middle of February, we started to see the daily increase its volatility. Now, it did pull back at the beginning of April, but that didn't last very long. And through this whole period, you can just kind of see the difference. This was much more orderly, and then all of a sudden you can see again, all the movement with the gaps and everything, just increase in volatility. So you wanted to be, especially as we moved into March, you wanted to be a little bit more careful about especially shorter term trades. All right. Now, on the weekly side, we've been this has been declining through this whole period from really beginning of 2023 up until now. We've had a pretty strong low volatility condition. And the market's benefited from that. We've had a really nice run in here. This is the first time we've actually seen the average true range move up and the moving average of the 18 MA of the average true range turn up underneath, and it's staying above. Now, typically when I'm looking for a reversal, I like to see some kind of a higher low form and then a higher high, almost in the form of like a 1, 2, 3 reversal. But it is an alert when the average true range is above the moving average and it's rising. It's important. Just like when this turned down below, we knew that this was a sign that the conditions were starting to improve. All right. So we want to watch for this. Now, what's interesting is that this has been really had a pretty big move here recently on the daily side, and it's starting to pull back. So what we'd be looking for a potential trading play, we'd probably be wanting to see an orderly pullback a little bit closer to the 18 while that turns up. Okay, if that happens and the average true range drops while this starts to flatten and roll over, then we'd actually have the potential for a signal, and I would consider it to be more of a trading signal. As long as this stays in this position above a rising MA of the average true range on the weekly, then I think we've got a little bit higher risk if we want to play for bigger picture trades. And remember, this has been a really good condition for long-term trades here for the past year. And I go through a lot of detail as to how I would handle this, when to hedge, when not to in the course. But I just think it's really worthwhile because of where we are right now. We've got volatility rising in 2 different time frames. We've got to be a little bit more careful. We want to watch and see if we get the right kind of pause or pullback here over the next 3 to 5 days. If that happens and this drops off and rolls over, I think that sets up the potential again for another another trading move to the upside. Now, until this actually rolls down, back down through and flattens this out or turns it down, I think I'd be a little bit more hesitant about putting on longer term trades right now using like a weekly chart for entry. So trades off the daily and or hourly, something like that, I think will be a lot more appropriate if we see this average true range start to drop down below and start to turn down and show that the volatility is declining. Just something I think to keep an eye on. Again, I think it's very helpful to recognize when are the optimum times to be trading in specific time frames, and when are optimum times to maybe be standing a little bit more in the sidelines, or trading less, and or just reducing our position size. If you're enjoying the content, hit that like button and also subscribe. So my research can be found at rabelstockresearch.com. You can also find information on my book and my courses. A good place to start is the book. I'm offering at a discount in a PDF format right now. So if you have an interest, you can take a look. All right, let's just follow up on these charts before I switch over to my main view. One of the things I wanted to show on the weekly chart, and this goes back to what I was saying about a little bit more risk on the higher time frame, meaning if I wanted to trade off the monthly and the weekly, do like longer term trades. Look at how this is. So we want to look for the green line is the 18-month line. All right, it's overlaid onto this weekly chart. All right, we want to look for buy areas at or near this line. Those are really typically where we're getting our lower risk entries, especially if we want to play for a bigger move. And that was essentially as we lifted off from the lows in October of last year. All right, we had low volatility, and the trend was turning back to the upside. This 18-month was turning back to the upside. Now, if you look at where we are, it looks okay from a weekly standpoint, like we're pulling back on the weekly and we're holding support, but we're pretty far away from the 18-month, and the 18-month is pretty far from the quarterly 18. You see where we get these big drops in the market like in 2020, you actually come down and find support in the bigger areas. Now, I mean, if we go back, you can see the start of this whole thing, really strong bull market took place in early 2012, where everything was sort of crisscrossing and we were getting a very, very strong period that followed once we had this kind of emergence out of this area. So we're looking for the lower risk areas where these lines are closer together. Do you see how this is a little bit farther apart? So we just got to be a little bit more careful, especially with the volatility starting to increase. Now, that doesn't mean you can't buy, but you got to be a little bit more selective and maybe actually looking for areas that are non-correlated with the market. All right, let's start going through some of the symbols, and we're going to first start with the QQQ. So, what I've been highlighting here is the fact that this has been outperforming. This is the relative strength line versus the S&P. It's been outperforming right up until about the beginning of this year, and then it started to drop. Now, we're below this moving average, but it actually hasn't rolled over yet. What I'd be looking for is another lower low, and I think this will turn down. If we fail to make a new high, we start to consolidate back, but we do it in a way where the QQQ is weaker than the S&P, then I think there's a lot more risk in this area. If we can turn this back to the upside, see, we just formed one of my the RSI buy signal, which is where the 20 RSI holds above the 50 and the RSI 5 drops down under 30. So we got a deep oversold reading, but we maintain the trend. And so I don't see anything startling here when I look at the price action. The price action looks okay. What's bothering me is the relative performance. We have to keep an eye on that, especially because some of the big names are really where this index locates these. So we gotta watch that and got to keep an eye out and see how this plays. Now, the 18-day is cupping around here. This could pull the same thing that I'm talking about with the S&P. We could pull back or pause for a little bit and have this cup around, and this could look pretty good for another trading move to the upside. All right, let's look at the IWM. I've been saying how we've been looking for a higher low to form. We've done that now. We actually turned the zig down back to up. So we have formed another higher low, and we formed another RSI buy signal. Now, in and of itself, by itself, that's not that big a deal. But when I look at the way this is playing out with the monthly and the weekly, and we have a low ADX condition on the monthly, we actually have a low ADX condition on the weekly as well. We want to see a little bit of strength here. And that's what's going to cause this ADX to this RSI relative strength line to start to really kick in. We just haven't had that take place yet. We're not seeing the kind of strength and follow through that's going to cause the relative strength versus the S&P to kick in. And as I've been saying for months on the show, I don't think, the environment where we broaden out and we show a whole bunch of stocks that maybe we haven't even talked about starting to really show signs of life, that's not going to happen until we see this relative strength line improve. Now, I did want to take a look at China because I think this index, I had some requests this week from my monthly subscribers, and they were talking about some of these China stocks, and I just noticed this big. So we had this kind of climatic low on the monthly chart, rallied up, and then came back and tested this area. And now we're turning up from that. We've got some signs of momentum loss to the downside, meaning things might be flipping back to the upside here. And then we've got some signs of strength on the weekly. So it might be worth going and taking a look at if you're interested in some of these. Notice the relative strength starting to kick in on the China market versus the S&P. So might be worth taking a peek at some of those in that area. All right. Let's look at the BLK. So BLK, so if I'm looking at this from a longer term standpoint, we're pulling back to pretty strong support. I mean, there's pretty significant support here, right around the 750 mark. Now, the way it's doing it is telling me that I don't have to be in a big rush because we broke the 18-week and we're consolidating. We're caught. Almost want to call this a danger zone when you're in between these two lines. All right. We don't really know which way this wants to go. I actually think it's going to hold because there's so much support underneath. But we're not showing an amazing amount of strength to the upside where I want to pre-guess that for a move back to the upside. I think what I would want to see is a little bit more consolidation take place here. And I think that'll prep this for a better move. There's a lot of support underneath, so I'm not expecting this to drop very much. And we've got underlying support from the longer term time frame. So I do think this is the kind of weakness we want to be interested in. I just think it's a little bit early. All right. MS. So if we look at this on the monthly chart, something I really like to look for is where the MACD was way overdone here in 2021, and we've consolidated back. And on a monthly chart, we formed an ABC. You see how we made that lower high, lower low pattern. And look at what the MACD did. The MACD was way overdone, and now it's come back and found support at the zero line. While that was taking place, the ADX dropped from a very high level all the way down to oversold. So this is in a position where this really could, if it gets going, could really launch into something that's a little bit more meaningful. Now, because this is a low ADX pattern, this has been low for about a year now, we need a breakout. All right. And I don't think we've seen this really break out quite yet. It's close. I mean, it did take out the high from, the last 6 months, but I like to see it take out the high from about a year ago, a little less than a year ago. I think if we can do that in the position that it's in, this would look really attractive. I don't have a problem if you wanted to maybe take a little bit of an early entry on this, but I think the true breakout is taking out the high, which was from July of last year. All right. Keep an eye out for that and like to see a little bit more volume associated with the breakout as well. Okay, so SMTC. So I think this is pretty intriguing. We've got the semiconductors, and one of the things I was going to say is that I mentioned earlier with the volatility that there could be some trading plays, and what I refer to as a trading play would be where this is the higher time frame. The weekly is like saying pulling back, and then we trigger it off the daily, or if the daily is pulling back and we trigger it off the hourly, or those two time frames are what I'm talking about when I'm talking about trading. All All right. And so in this instance, I think there's a lot of semiconductors that are actually setting up as potential trades, pullbacks to the weekly where you would trigger in off the daily chart. All right, you can go and you can look at stuff like NVIDIA or even some of the equipment guys like Applied Materials or KLAC, stuff like that. They look like they could be setting up for another trading play. Now, when I look at this stock, I see what's going on. We've got a big turn developing. This is a huge move, breaking back above the 18-month for the first time in a long time. All right, we've got MACD kind of confirming. We've got pretty good volume associated with it, but the problem we've got is that we're short-term, we're overbought. I mean, we've made a little bit too much of a move here over the last 3 months. Look for a pullback, the next pullback towards the 18-week. Look at the volume pattern. Look at the ADX kicking in. These are all really bullish signs, but we need an entry, and that would be a pullback. Now, what's going to happen on the daily chart? We should get an ABC correction that causes these two lines to come together. So that's really what I'd be on the lookout for there. I do think I would be on the lookout for some of these stocks, though, because they look pretty interesting in the semi area. Now, computer services. So another one where we're getting back above the 18-month. That 18-month is flattening out. All right. And we're showing some signs of buying strength because the green DI is breaking out above this prior red area. We're getting that above, and that's causing the ADX line to move up here. We have this average volume line, right? Notice how recently we're starting to see a little bit better action with the buyers. So I'm kind of encouraged by that. I think all of those are positive signs. But again, now this one has earnings coming in about a week. So really nice on ACP to be able to just put these right on the chart like this. You can do that really easily. Let me just show you. You would go click on this here on the daily chart, and you can just put on earnings date and check that off. All right. So that's really what you want to do. If you want to have your earnings. Now, I only have it on that chart. I don't like to have a lot of stuff on my chart, but I do really think it's a nice advantage to have that up on the chart there so you can know when earnings are coming. So just recognize that. I think we actually need a little bit of a pullback. That we just missed an entry. I mean, this was the entry right here. Which was this pullback on the weekly. That's the combo we're looking for. We want to look for those kind of entry patterns. Now, I think we need to do that all over again. I would hold this if I were in it, or maybe do something protective with earnings coming. But I think I'd wait now to see how earnings play out. Okay, so Lulu. So I mentioned earlier, let me just show you. So let me just give you an example. So BLK, this is pulling into the monthly line, which is rising. All right. So I view this as good weakness. This is a pullback. This is good weakness. All right. Now, if I look at Lulu, the weakness here is causing the 18 to cause this to break the 18-month. So I view this as bad weakness. I don't really want to. So a lot of times I want to buy weakness, right? I want to buy during a decline phase or a pullback. But I want to look for underlying support from the bigger trend. We don't have that. We had some price support right here that was right around the 18-month. We're falling back into that level. I view this more like a trading range type of a stock that could actually have a little bit more risk. I mean, the bigger support now is probably closer to 300. So I would sort of shy away from this right now. I don't see this as being all that optimum until we firm up, show signs of real strength in terms of firming up here. I wouldn't be all that interested. Now, this Terawulf, it's pretty clear, I think, because this is more of a low ADX condition on both of these time frames. I don't really want to play a pullback yet, right? I mean, the moving average is flat. 18 is flat here, and it's flat here. So we don't play pullbacks when that happens. What we want to do is essentially draw trend lines on price and look for a breakout. So I kind of am looking at this 3 level as being pretty important. I think if we can get through 3, and especially in the form of like a big green bar, if this were actually green, if this were green like that, you see how we tried to get through 3 and it ended up forming a big tail? I'm looking for a bar like this that closes back above the 3 level or around the 3 level, something like that. That would be really a good sign. And that's kind of what I'd be looking for here. Okay, now this one I really like the looks of. I went through a bunch of, in fact, I went through every single software company the day before yesterday. And I just wasn't all that impressed by a lot of them. A lot of them are pulling back. They kind of look sloppy, but this one actually has a pretty attractive look to it. It's holding the 18-month, which is turning back to the upside. And if you notice what's taking place on the weekly, we had consolidated and now we're starting to emerge here. Now, one thing we want to see a little bit more strength. And we want to see this green DI breakout. Now, I don't need to have the ADX breaking out above 25, but I do want to see the green DI breakout, because what I want to do, because of what I've seen in the software area, I want a little bit more confirmation. I want to see a little bit more like a strength here and then a pullback that holds the breakout and play a higher low pattern. But certainly a name I'd be watching for because of how it's traded, especially relative to its peers. So that's how I'd handle that. I think I'd let it follow through a little bit more and then look to play the next higher low. Okay, so BDRY. So we're getting a pullback here. Now, let's just look at this, because this is a 2 time frame pattern. We get a move to the upside. We've got good momentum. The MACD crosses over during the pullback. So when I see that, it doesn't mean that I don't want to do it anymore. It means I want to be a little bit more careful about my entry. So what we're looking for when that happens is typically some kind of a double bottom. Sometimes it'll go all the way up to the midpoint and rally up and then come back down. But this has kind of done that. If you notice where this crossed over, we did rally up and come back down, and now we're firming up a little bit. We still have a rising 18 above a rising 40. We've still got strong momentum, and there's no crisscross between the buyers and the sellers. So all that is positive. Now, if we go and look at this daily chart, which is really where I want to enter from, I'm looking at what's taken place on the MACD and the ADX. And the MACD had a big, huge overrun of the 0 line. It has made a double bottom. It moved up, but it doesn't have any kind of real dynamics to the up move. I mean, a little bit of gaps in here, but I think based on the way this is set up, look for the next higher low. I want this to prove itself a little bit more and hold the 18 on the next pullback. I think if we do that, see, if we had better green DI on this move, then I might be willing to just go ahead and play this on any kind of weakness. But based on the way this is played out, I think I want to see a little bit more confirming evidence and make it form a higher low at the 18. And I think that's a better strategy here. Thanks for watching the show today. If you have a stock request or two you'd like to send over, send it to stocktalk@stockcharts.com, and I'll try and get it in on the next show. If you have an interest in learning more about some of these trading techniques, you can go to Invest Like a Pro. That's my YouTube channel. All right, have a great week, and we'll see you next time.